I'm prepared to pay market value. And that's true. Now, some people will kick back at that. Why would you put that in there? Remember, this is all determined. The value of the property is all determined on what it currently does today. This is a business.
Welcome to the Peak Profits Podcast, your guide to maximizing returns in passive real estate investing. Hosted by Brian Morris and Chris Ward of 7 Peak Capital, we dive into conversations with industry experts, sharing insights, strategies, and stories to elevate your investment portfolio. Whether you're a seasoned investor or just starting out, this podcast is designed to give you the edge for financial freedom. Get ready to unlock new opportunities, discover the secrets of successful investing, and take your passive real estate investments to the next level. Let's get started and reach those peak profits together.
Welcome back to Peak Profits. Today we sit down with Aaron Ford. Aaron is a dedicated family man and entrepreneur. He currently owns a house flipping company, a concrete company, and a property management company, and is actively pursuing freedom through multifamily real estate investing. Aaron, thanks for being on the show. We'd love for you to introduce yourself and share a little bit more about your background.
Yeah, guys, it's a pleasure to be here. You know, honestly, I'm just a normal guy. I'm just an ex-construction worker. I got a bunch of kids, wife. Everybody's counting on me to make it. And I'm currently in Kansas City area. And, my story kind of starts with, listen, I have a bunch of kids, and my main objective in life is to maximize my time with those kids, right? And my family, like most people, right? That's our goal. But we have to trade our time for money, and we're stuck in this trap. And that trap, usually as you buy stuff and advance in life, it gets up to be a bigger and bigger trap. And that was me, right? So I finally mustered up this strength and courage to start my own company. Right. And I started this business, but I didn't really start a business. I just owned my own job. So I went from working 40 hours a week for somebody else to working 80, let's say, for myself, because when I made the jump, I had to make it happen. Right. This was a huge deal. And so I had to put more attention into this company than I realized. And I was the company. So it became even more miserable. And I was like, searching for a way out of this. And thankfully, I was still trying to educate myself and read books and things. And I stumbled across Cash Flow Quadrant by Robert Kiyosaki. It's kind of the secondary book to what we all know, Rich Dad, Poor Dad. And, it hit me right on the head. That's exactly what I was. I was the S. So there's 4 different ways you make money. You're an employee or a sole proprietor. And then on the right side, you're a business owner or investor. And so that's the goal, to get where you're not trading your time for money is on the business owner and investor side. So, I was stuck as an S, and I realized that immediately. I said, I've got to find a way out of this. And so as I searched for new business systems, all the successful had their hand in real estate somewhere. And, I started reading books about rentals and quickly realized that, hey, you can make $200 profit per month per unit, potentially, if you operate real estate correctly. We can get into that later. But, so I was like, gosh, if I had 20 units, I can make $4,000 a month. Like, man, if I have 40, I could have $8,000 a month. And I was like, that's my ticket out of this deal. So I just went full force, educating myself, listening to podcasts and everything to be able to achieve that level, right? And at the beginning, I was like, well, if I buy single family houses, I might be able to buy one a year or something. And this is going to be so tough to get to that goal. Let's just learn multifamily. And so just started educating myself in that realm. And the goal was 20. And I currently own, 152 units myself now, and with partners, 364s. But I started from absolutely nothing. This whole thing is just, like I said, time is the most valuable asset in the world. And wealth the definition of wealth is how much time can one sustain their quality of life without physically working. And wealth is created or given to you or earned through cash flow. But cash flow is a result of operating business systems. And that's the part that's tough that we'll get into.
Aaron, that's a great introduction. And you've shared quite a lot of really, really powerful things there. But it's really not as easy as you may have made that just sound of going in and getting 1 unit a year or getting to 20 units and now over 365 units. Like, what were some of the initial challenges you think you faced when you were transitioning or moving from trading your time to being more of an investor?
Well, I'd say the first problem or thing that I had to overcome was I had no credibility in the game. And, you call brokers all day long. And yeah, we'll send you a deal. But the deals that they send are the ones that their little inner circle has already passed on. So they're sending you deals that aren't deals because this is a relationship game. So for me, breaking into the broker world was very, very tough. And so I learned quickly. I was like, man, what they're sending me just doesn't pencil out. You hear that a lot in this world. The deals just don't make sense. I would argue you're not close enough to the actual deal. So there's people that are getting deals that are just screamers, and those we never hear about. So the brokers are a fantastic way to get those deals, but you've got to have the credibility and you got to be in their little inner circle. So then that leaves one other option, and that was direct to seller. It's like, well, I'm going to figure out a way to go straight to these sellers and potentially find, one of these good deals. So, that was the biggest hurdle in the beginning. And, there's a lot of options when you go direct to seller, but I really dove into that, educated myself there. And I have a few methods that have worked and things that didn't work, especially geared toward the multifamily world.
Yeah, no, that's a great point. And direct to seller is the golden ticket. A lot of times you hear in the industry, if you can go directly to an owner of a building and have a conversation with them and make it a win-win situation, right? They may be in a situation where they want to sell, or it's that time of their ownership that they want to get out of their property. And then, you're in a position where you want to now purchase that. Can you give us some tips in regards to going directly to seller, or how you're finding these deals? Like, what are some of the strategies that you found from the beginning to kind of leverage those relationships and identify where the sellers are?
Yeah. So the first question that I had to ask myself is, who is the perfect seller? Okay. I am not going to be buying a property from you guys. You guys are sophisticated. You know what you're doing. When you take something back to market, it's been optimized. You're looking for retail. You're looking for, right. I'm going to be buying from someone. So I'm not trying to send you marketing per se. I'm not trying to send the sophisticated investors marketing. So the perfect seller is somebody, if you can imagine, maybe he built the property himself, or his dad did, or maybe it's his wife. She's 75 and her husband passed away, but they'd owned it their whole life. She's ready to retire. No matter what the scenario, they're always hardworking. They care about their family. A lot of times they manage themselves. They're tired, right? They're grouchy. Okay. A lot of times they're grouchy, and they're always on the lookout for a scam. They're always on the lookout. You got all these people. A lot of times they have the property in their own name. Sometimes they have it in an LLC, and we can go through the strategy on how to find the right person in that regard. But that particular seller, that person, I can tell you what, they're not going to be listening to any voicemail drop that you send them just randomly. They're not going to be answering or responding to a text message, most likely. And if it is, it's going to be something you don't want to read. And they probably won't even answer the phone. I don't know this phone number. I'm not answering this. But you know what they do? They check the mail, okay? And they check the mail, but they're not going to hold on to a postcard that has, I'd like to buy your apartment, with money symbols on both sides of the buy word, right? Like we've all seen, like the new hip thing. These people, they want to pass the torch. They want somebody that they can be friends with, that's local, that's just like them, and pass the torch. So keeping that in mind, that's the ideal seller. So the letters, personable letters is where it's at for me. Okay. So it starts off with the data. Where do you get the data? Where do you find these people? Well, there's a couple of different options. Reonomy, CoStar, Yardi Matrix is one I've used. And I've also used the county assessor's office. And actually that one is a little better than people realize. Okay. And it's virtually free. So you call up the county assessor and say, hey, I'm looking for a list of commercial multifamily property owners in your county, and they by law have to send it to you. Now they can ask you to pay them a few bucks for their time, but that's a little inside deal there. And the great part about that is when you get it from the county, the list you get most likely is the list that they send the tax bill to. And that's who you want to get letter. You don't want a registered agent. You don't want send it to the actual location of the property. You're not going to get the owner. But if you can figure out where that tax bill is going, and opencorporates.com is a great place to scrape that and to check those records. But that's where you get the data, and that's what it all starts with. How do you find these people, and how do you find their address?
So once you've found those people, how do you get them to pass you the torch, as you just said, right? Like, what are some of the things that you would put into those letters, right? Being a very personal person, like what do you actually do as you're going through that? Not picking up the phone, not sending them text messages. You've got one piece of paper that's going in the mail or whatever that might be. You said it's not postcards. So what are you sending them? What are the tips and tricks that really get them to pass you that torch?
Yeah, no problem. No problem. Well, first of all, it needs to be personalized. So I always hand address the actual outside of the envelope. I'll have one of my kids or somebody that's can hand address. They're going to open a hand address letter way more than they are something that's pre-printed. And so I'll have my return address and hand address the outside. For the letter itself, I type the letter, but wet sign the bottom. Okay, and because this is a commercial multifamily, there has to be a level of sophistication, but it can't be flashy. Okay, they want to know, first of all, who in the world is this dude? And does he even have the capability to buy my $3 million property, right? And because they're getting all of this bombarded with all this marketing from these wholesalers nowadays that send those postcards and do all this stuff. And they think a lot of times they're mailing to a duplex or a triplex. And the actual pool of people who could potentially buy a large apartment building is a lot smaller. So the first thing you want to do is gain some credibility. So I have a letterhead with my company, and at the bottom I'll have our website, my name, it's wet sign, and then maybe some social media just for them to look up. And you need to have an online presence, because I can't tell you how many times I've sent out letters and immediately my LinkedIn will start getting hit. Those people start they definitely want to see that you're credible before they call a lot of times, even if they are some crazy person that, may or may not, they know how to use that stuff. It would surprise you. But you take, so that letter is drafted. Now, what do you put in the letter? So this is where it gets interesting. So as I did this, I learned there's some common responses. All right. One of the most common responses is, how in the heck did you get my information? So they call and say, I got this letter from you. How the heck did you get my information? So the first thing I put on there is, hey, Mr. Seller, I know this is kind of weird. I got your information from the county assessor's office. So that person shouldn't call me. If they just want to call me and tell me how, ask that question, then maybe they shouldn't call, or they won't call after I address that. Right. And I noticed there was a lot of other questions. It was like, well, what are you going to do with this property? They don't want to sell to some flashy sales guy or somebody who's going to flip it. Believe it or not, they're like, are you flipping this property or are you going to keep it? So I would put, I'm not a flipper. I'm not a realtor. I'm just a simple guy who's trying to add units to his portfolio and feed his family. Right. That's what they're trying to do, or we're trying to do, and so they kind of gains that credibility. Oh, okay. He's not, so he's not a realtor. There'll be no commissions to pay. I don't have to fix up the property. And I also like to put in there, I'm prepared to pay market value. And that's true. Now, some people will kick back at that. Why would you put that in there? Remember, this is all determined. The value of the property is all determined on what it currently does today. This is a business. So if they're not optimized, if they have 15% vacancy and their rents are $300 below market, I'm going to pay market value. I'm going to put it in my analysis, and I'm going to tell them exactly what market value is and what the bank will pay for that, or will lend on that. So I can honestly say I'll pay you market value. That's a very good thing to add there too. So, these people, again, they want a relationship with somebody. They want somebody they can trust, and they want to pass the torch. They don't want a flashy sales guy, and they don't want somebody coming at them with all these different angles. And you don't want to ask about the owner finance up front either, because one of the other main questions are that they don't know that you have any money. And so if you immediately say, hey, would you consider owner finance? That tells them you don't have any money. I mean, I know it's a good strategy and I definitely use it later on, but they hear this dude doesn't even have the down payment.
Yeah, no, those are amazing tricks to kind of build that relationship before even knowing who you're speaking to. And I think that helps probably put their guard down a bit to understand, hey, this guy seems authentic. He seems like a local presence in a market who's just genuinely looking to buy a property. And so I'd imagine once you send that letter out and that seller and that owner is receiving that letter, there's not many times that you get a phone call right away and they say, hey, I'm ready to sell you my property. So what goes into those next steps about building that relationship with that seller, and what are you doing from then after you get that initial contact?
Yeah, great question. So you need to answer the calls live, no matter what. I know that's a burden, especially if you're working another job. Like, somebody needs to be answering the calls live, and it's best if it's you. If this guy who's a little bit shaky and he's had 10 people send him a letter, but he decides to call you and you don't answer the phone, or nothing against VAs. I absolutely love my VAs. I don't know where I would be without them. But if you have your VA answering the phone, these type of people are going to hear scam all day long. So answer the phone live, okay, and have your online credibility. But your goal from the call is to gather just a couple of bits of information and then set a meeting. Okay, so for instance, you want to know what's the current income. Have you done any updates on the property? Right. I'll ask about what expenses they pay, just because I really want to know if they pay utilities or not. I don't care about their expenses because they don't ever list them correctly, and I know what my assumptions are anyway. They're usually managing them themselves, so I have to allocate for management. So I really don't care too much about the expenses besides, do you pay for utilities? Is it sub-metered? What's the unit mix, right? And then why are you selling? And then, hey, when is the soonest that we can meet in person? Like, I want to be at the property with this guy or gal, or coffee, something. And so the two things that are burden are answering live and meeting up with them every time. Even if you think that it's not a deal, this can be burdensome. But if you do those things, it will set you apart. Because first of all, if you get in front of them and they like you, which they should, they know so many people that are like them, right? And so a good question to ask is, well, hey, we couldn't work this out, but you have a friend now. Hey, who do you know that I should know? Right. And that person will answer their friend's call. Hey, I got this guy here. He seems nice. He's got some money. He's ready to buy a property. It didn't work out with mine, but I'll send him your way, John. Right. Those kind of things you just can't measure that. The opportunity that's lost by you just throwing out a number over the phone and hoping that it sticks. Right. And so after you sit down, go through everything, gain this rapport, that's when you start talking about numbers. And it's always based on facts. And the facts, this gets into, how do we even know a deal's a deal, right? This gets right into this, because the current income minus the expenses, this is not rocket science. A lot of people get too far in the weeds on the underwriting stuff. And definitely you need to do that later on. But here at this point, you take your income minus the expenses, current day income, right? Any vacancy or whatever, but minus your expenses. And that leaves you a number, an NOI, right? An operating income number. Now, let's say they want whatever price they want, $1 million minus 25%, right? Because that's the down payment that I know I want to put down at the bank, right? Now, I'm only trying to put down 20% to 30%, depending on the property. So that's important to note. The value of the property is not subjective if you know what your down payment is. And here's why. So if you take the 25% off of the purchase price, that leaves a $750,000 loan balance in this scenario. You run that loan balance through an amortization calculator at the current market rate for interest rates, and it tells you what your payment is a month. If your payment is not covered by 1 point of what the actual net operating income is, then the bank won't lend anyway. And there's only two options at that point. You lower the purchase price to where that number does cover, or you put more money down. Well, I'm not going to put any more money down than that. That's just my criteria. So there's only option is to lower the rate, lower the purchase price. So it's not me saying, hey, Mr. Seller, your property's not worth that. It is me saying, hey, I really love your property, but all it will support in debt is this. Therefore, this is the most I can pay, right? You're blaming it on the bank. You're not blaming it on you or your opinion, because no matter what your opinion is, there's always going to be somebody else with a different opinion. Some broker he might call later will come in and just promise them the world, right? So you're always going to be made to look to be a liar. You can't really argue with the bank will only fund this on the property. And so that's a good little strategy there, that you're also not going at them with, the whole renovation thing. Your property needs $250,000 worth of work. It needs a roof. It needs this. You haven't done this. Go in there and tearing up the property and just degrading it to get a lower price, it's going to piss these people off most of the time, right? But if you say it in a way that's like this, hey, the only way I would feel comfortable taking on a property like this is if I use my contractors that I've trusted, that I've done lots and lots of work with, and it would cost me through them $150,000 to renovate this property, because he's always going to know. Tim over here, the neighbor, he does all my HVAC. He's not licensed, but he does it really cheap. I'm like, respectfully, I can't do anything with this property unless I use my trusted contractors, and this is what it'll cost.
That's really, really good insight there, in various different kind of capacities, how you ultimately very, very quickly, or back of the napkin, as some people would say, figure out whether a property does or does not make sense. How do you find the property before you actually even get in front of the sellers? Like, is there a criteria that you go through when you're going to the county assessor's office to say, okay, only give me properties that look like this? Or how do you identify? Because I'm sure that the list you could get from the county assessor's office is massive. Like, how do you decide which people you're initially going to send that letter to?
Yeah, that's a great question. So you would be surprised. The list is probably not quite as big as you think, but it's 5+ is the only designation at most counties. Okay, so you can't really filter it too much more than just 5+ commercial multifamily. Now, you can take that list and you can overlay it with other types of lists if you want, that kind of just show any sort of problems. Or, like, let's say, sometimes you can get a code violations list from a city, and if you take a code violations list for the last 2 years and you overlay that with your list of commercial multifamily, and the ones that pop out of that tell you that, okay, yes, this is commercial multifamily and they've had some sort of code violation, which lets you know that something happened there. I don't know. It's just an indication that there might be a little bit of distress. I don't really use that option. Honestly, I go to the county and I get the 5+, and I usually do most of that when I'm doing the county. Now, if you go to some of these other places, I would recommend them. They're a little bit more money. You're gonna have to pay for a subscription and things, but you're gonna get a way better list, and you can begin to start playing with that list in those different products. But when I started, I just went straight to the county assessor and pulled all of it, mailed straight to them. And when you mail to like an LLC, and you scrub this and you go and check it with open corporates, that's kind of a time consuming process. So this is not, you can send it to a VA and they can help you look and see what addresses it's going to, what address is it for. You can actually do street views. Is this something that I would want to buy? You can get nuance like that. But if you're going to do all that, you might consider the paid versions of the options I mentioned before, so that it's a little more streamlined.
No, that's great. And then when you're sending these letters, the first thing that comes to mind, can you give us a rough estimate of how many people are actually responding to you? You mentioned earlier that they're getting a ton of letters themselves. You try to personalize it to differentiate yourself. How many times are people actually responding, or what are you seeing the response rate be? And how many times are you actually actively targeting people multiple times before you get a response?
Yeah, well, I would say, maybe 5% response rate. And then out of those, maybe 25% actually somebody that'll sit down with you and stuff. I mean, actually, most of the people that call, now that I've addressed most of the issues, I can set an appointment with personally. But yeah, it's definitely a numbers game, and you've got to throw out as much as possible, and that's the whole name of the game, right? It's just get out in front of as many faces as you can, and hope that it leads to something. Yeah, I don't have an exact number on that, but I mean, the different counties and different cities are definitely different, right? So anytime that I'm in the major metropolis, I'm in Kansas City. So when I do the major centralized Kansas City, my response rates will be substantially lower. Into the tertiary areas, I don't want to go too far. When I go to the tertiary areas, my response rates are higher. And I think, it has a number of reasons, but you probably can expect that in most MSAs.
So we've spoken about when you go directly to the seller. You did share their referrals. Like when somebody says, let me introduce you to my friend, do you go through the same approach with them in terms of building the relationship? Do you go and meet them immediately for a coffee or try and tour their properties? Or does anything differ when somebody almost introduces you to their friend?
No, not really. I would say it's pretty much the same. I mean, just make an effort to go sit with them, and make an effort to be likable, right? You're not flashy, pulling up. I mean, anyway, I've also noticed that leads me to a point that most of these people are not driving around in a brand new truck, and they have the money. That's just not what they do. They want to go fix, for whatever reason, they want to go fix a broken, leaking faucet, right? And I don't understand the mentality, but it's kind of like, it's just that generation before us that's just like, if I don't do it, nobody's going to do it. I can't find any good help. They're going to take it. And so that's the mindset that I go into. I'm not trying to be somebody I'm not, but I know the person. The faces just change. I know the person. They're always similar in that regard. So when you get a referral, that means that his buddy already likes you, and you really have to work hard to screw that up.
Yeah, it's a warm lead, and you're already obviously building a great relationship with the person that referred you. Otherwise, it wouldn't give you that referral in the first place. And I think a lot of this that you're talking about is building those relationships and those rapport with potential, sellers, right? Because they obviously like you represent yourself well, and then you know what you're doing, and you want to create a win-win situation, right? Regardless of what situation this potential owner is in right now, are considering selling the property to you, and they want to ensure that you're buying it and you're going to do well with the property. So once you identify a property and you're in talks with the seller, right? Many of the times, from what we've seen, is mom and pop owners don't have great reporting and don't have great paperwork. So once you get into that due diligence, what are you looking for specifically in that due diligence period to understand if this is a good investment?
Yeah, a lot of times I'll help them put together their rent roll. We'll go through all of the numbers. Hey, what was taxes this year? What, I can look that up, but what'd you pay for lawn care? What do you do for this? I'll get as much information as I can from them. But absolutely, I definitely put together mini rent rolls just on a spreadsheet just to send over to the bank. And I'll tell the bank, so I deal with local banks that understand this as well. I have a good reputation with them now, but even in the beginning, the local banks understand this. Okay, so what's it bringing in for rent? And if I can detail that out on a spreadsheet, they are going to do their own analysis and say, oh, market rent's $1,000 here and he's getting $650. They know what a deal is as well, right? So keep in mind that the bank will, in a scenario like that where there's a lot of meat on the bone, they would actually go off of a hybrid pro forma, right, for lending. They will. Now, I know people say they only go off of actual numbers. I'm here to tell you, you can push it. But if I'm going in for a basis with this owner, I'm going off of current day value. And that's all I want to pay, especially in a market like right now. We want to pay, what does it bring today? And then what is the NOI at the cap rate today, right? So getting all their documents and everything, it hasn't been as big of a problem as most people think. So we put it together and I use my assumptions for my expenses and say, hey, Mr. Seller, I see here that you've been managing this yourself, but this is going to cost me 8%. So I have to put that line item in here. And, I see that, you've been doing all the maintenance yourself. The only way I can touch this property is if my trusted maintenance guys do the maintenance. I don't have time to do it. And so in that, for that, I need to put 10% of gross income. I need to have an allocation for that on that line item. Right. So, and then when it's done, if it's a direct to seller, the broker responses are a little different, which we can talk about. But when we go through the numbers together and we see what will support in debt, that's the purchase price because of what it'll support in debt. But a nice key to always remember is at this point of the conversation, at this point of the relationship, is when you throw out multiple offers, multiple opportunities. So I might put together an actual LOI. Hey, it's great to meet you here. Let's, let me shoot you over an LOI and let you just review it, with your wife or whoever. And I always put in there 3 different options. And because it gets their mind thinking, not yes or no, it's which one maybe, right? It's more of a, I don't know what it is, psychological advantage to send multiple offers. So the number one should be, hey, it's, I can pay $1 million going to the bank, normal situation. Option 2, I can pay an equivalent to 1.1 million, but here's how it breaks down. You carry $300,000 in a second position lien loan, and then at whatever interest, and I detail out the interest. If you accumulate all that interest over 5 years, then your total price actually turns into 1.1. Or option 3 is usually just a full owner finance if they own it outright, right? And so it might be detailed in the same way. If we put it on a 5-year deal, you might actually make 1.15 or 1.2 instead of your 1 million that you're asking, right? In these different options because of the interest that they're going to get. And it's always important to let them know the tax advantages to spreading out that liability through multiple years. That's the time to talk about that, is after you've already made friends with them, not when you're on the phone. Hey, would you consider owner finance? No, you're broke. So, but then you can say this. And then a lot of times they just want the most money and they still want cash flow. So these owner finance options are gold.
Yeah, you definitely don't want to be approaching people pretending that you're broke when you're trying to buy these $1 million buildings. How does that differ? Everything you've kind of just highlighted for us, Aaron, when you are dealing with brokers, right? So you've got the direct to seller route that you've kind of shared what you go through, your process. You've got then the referrals that may come from that. If somebody doesn't ultimately sell you their property, they've got a friend. And then there's obviously the brokers or the wholesalers. Like, how do you interact with them?
Yeah. So just stand on one most important thing. Always respond. Okay. If you respond, you're in the top 10% already. So what happens? Most of these brokers, they'll send out deals. They know they're not a deal, or, maybe they think they're a deal, right? But they send out a deal in emails, and very few people, if any, respond. So they get no feedback. They don't even know if you received it. Maybe it went to spam. If you respond to every one of them, you're going to set yourself up to be at top of mind later on. Get yourself a good 3-column spreadsheet or 4-column spreadsheet. What I mean by that is there's a lot of different underwriting tools nowadays, but I would look for one with up and down columns that have expenses on the left and maybe current column, potential column, and a potential offer. And so they just get you something that's nice and easy that you can copy and paste. I use Michael Blanc's syndicated deal analyzer just because it works for this, and I don't want to learn another software right now. But I know there's a lot of good options out there. But that software or that spreadsheet has the columns, okay? And so I take what the broker sends me and I put it in the current column. And then really it has 4 columns. So, brokers typically send you something that is not accurate, right? So let's just call it 4 columns. So the current column, the very first column would be exactly what they sent. And then the second column is my modifications to what they sent. So my version. And it might change a few things. It might say, well, you said that the gross income was 100,000 a year, but after I looked at the T12, it's 92. So you kind of have a pro forma gross here. So this is my version, right? So you just quickly put their information in there. Then the third column would be the potential of the property. What could it do after it's optimized? Maybe potential year 3, year 2, whatever. You put that in there so that okay, this is really going to push out X amount cash on cash after I optimize it. And then the fourth column is potential offer. Okay, and this is important because we buy off of actuals. So we're not going to buy off of column 1. Column 4 will reflect column 2 if you're following me here. The first column is current state. The second column is my version of what's really current right now. The third is potential, just kind of for our eyes. And the fourth is, if I was going to make a potential offer, here's what it would be. And it's usually going to mirror the second column because that's what it currently is today. And then you just adjust the price, just like I'd mentioned before. There's only 2 options. If the debt coverage ratio is not 1.25, there's only 2 options. You put more money down, which is not an option because we know that's our criteria. And by the way, if you're investing or getting money from investors, it's usually not an option there either because they're going to get such a diluted return that it's not going to be a deal that you can raise for. So I try to stay around the 25% down unless there's just absolutely crazy upside. But that's the DSCR. The only thing you can do is put more money down, which we're not going to do, or lower the purchase price. I'll lower the purchase price, reflect it in column 4, and say, copy and paste it, email back. Hey, thank you for sending this deal. I quickly analyzed this. If you could look at column 4, this is my potential offer in this scenario. I know this is a little off from what you were expecting, but I just wanted to give you my feedback. If it's close enough and you'd like me to write something up as an LOI, please let me know. Send. And you want to send 100 of those, or you want to send as many as you can as fast as possible in the broker world, but you want to always respond, right? Like I said, they don't get the responses back, but even if they get one back that doesn't line up with their projected sales price, they know that you know what you're doing. And that's very simple. You don't want to go into one of these spreadsheets, in my opinion, and spend 45 minutes analyzing everything, being thorough, right? Sending the whole spreadsheet over to them, you just want to tell them quick responses. And that's how I found was the best for me.
I mean, that's great feedback. And that's awesome advice too, right? When talking to and building relationships with not only the owners, but the brokers as well. Clearly, you know what you're talking about. You understand the numbers, right? You understand how to target both off market and any on market deals that are brought to you. You understand how to take it through the process, right? Building the relationships with not only the owners of the properties, but the brokers themselves. And laying out an offer that is fair and your reasoning and justification as to why it's fair, right? I love that you give the three different options to an owner, right? Here's where you think that we should agree to on price, right? Here's a seller finance, here's a full owner financing option, right? And gives them the options and the reasoning behind that. And I think that builds a ton of credibility and value. So I want to, once you agree on price and both you and the seller agree, this is a great deal for both sides, you purchase the property, you started a property management company. So you obviously have a lot on your hands. You're a busy guy. You talked about this earlier when we started in the intro. What does that takeover process look like for you? And how are you managing a portfolio to this size while still doing all this other stuff, handwriting letters and everything else that you speak about today?
Yeah, no, it's a lot. So, I have a great team. I'll start by saying that I've got a great partner in the property management company. So, we both have our roles there, and then our team members under us there. So it's all about team and systems. And so, if I had to give any advice, it would be get a Cadillac system and just find a Cadillac team. And if you have, I don't know what the number is of units, but right, if you're going to if you're going to bring in management in house, I probably would recommend it right now. This is an operations kind of cycle that we're in, right? And so I feel a lot more comfortable now that we have control of our future instead of third party managers. And kind of the process when we take over, obviously we're just noticing the tenants and we're letting them know that, hey, we care about you in a way that may or may not be consistent with what you're used to, right? But, the personable type of interaction in the beginning is where it's at, right? They're just uncertain when you take over a property, and these tenants, that's their home, and they don't know, is rent's going up, or, they have all these questions. And if you don't address them, then the rumors will start to spread through the community. They'll have, evening meetings out, pitchfork meetings, I call them, where they're all going to move out, screw this new owner, but if you go and you talk to them and say, hey, listen, nothing to be worried about. We're here. You can already see we're taking, cleaning up this and this on the property, right? And just kind of ease those uncertainties. But then the whole thing really boils down to tenant experience. Are can you provide a quality product for your tenant, and can you be responsive, right? We have internal metrics, where we're responding immediately to people. There is no delay. I don't care what they send over. We're responding immediately. And that's for the leasing side, for the construction management. It really breaks down to three different buckets, I say, in the management world or in the operations. You have the construction management / maintenance side, and then the leasing is its own kind of bucket or sector. Then you have the financial and tenant relation piece, which is usually done by, we have a good software. It'll kind of handle all that for you. But you really need to be active and responsive in the construction management side, maintenance side, and the leasing side. So when we take over and we've got to raise rents, another little trick that I just thought about. Let's say you've got to go a long way in your rents. And I mean, right now the market cycle is a little weird. Like, the most valuable asset today is your tenant that pays rent. So if you think you're going to go buy a property today, in my opinion, and raise it $500, you're probably going to get a surprise, because we're in a little bit of tough times, whether anybody likes to admit it. The tenant and the normal hardworking American is really strapped right now. And it's really starting to show. So if you're planning on banking on a big renovation project and a lot of increase in your rent, you might second guess that. I know we have, we're kind of looking for just kind of make it as nice, clean, safe functioning as we possibly can, and then not go all the way up and push market, right? We just want to keep a good tenant around. But, if you meet with the tenants one-on-one and you have some comps down the road, hey, you're in a 3-bedroom unit here. You're paying $600 a month. Wanted to show you what a couple units down the road are going for here. $1,500 a piece, right? I'm not saying we're going to go with that right now, right? I'm just saying that that's what the market rate is. And depending on if they're a good tenant, we have a lot of different metrics when we do due diligence. We kind of determine whether that tenant is someone we want to keep for the long run, or how that works, if they're in lease or not. Obviously, there's a lot of things that go into this. But if you show them what the other units are bringing and then make a reasonable and fair offer, a lot of times you can keep a good tenant.
You've gone into some of your kind of property management strategies and tips and tricks there as well. In terms of like efficiencies that you're gaining from not just the kind of increasing rents, but as you go into the property, what are some of the kind of first things you look to do to make the property a little bit nicer for those tenants?
Yeah, we almost always have to paint it some sort of two-tone paint and LVP flooring. I know the gray flooring's kind of played out, but honestly, a good LVP, nice quality flooring goes a long way with the paint. And then we're not tearing out any cabinets. We're not doing any huge moving walls, adding bathrooms. We're not doing a lot of that. We're just coming in and refinishing the kitchen cabinets, countertops. We might throw a new countertop in, new fixtures, LED lighting, new hardware, the LVP flooring, and the paint. And that's a renovation, right? That's what we would consider probably a full renovation. And then there's a lot that we can come into, and we may be able to do touch up paint, put some LVP flooring in the kitchen and tile in the bathroom, and kind of have a hybrid renovation scope. That's kind of what I'm talking about in this market cycle. More of a figure out a way to make it a good quality product for the tenant, but not have to go through the time and the expense for renovating the unit fully.
Yeah, that's great too. And give them like a freshened unit without having to put too much time and money into the unit. But paint goes a long way, new flooring, even touching up kitchen cabinets. If it's a dark kitchen cabinet and you're freshening it up and making it white and bright and nice and new, I know that goes a long way for tenants as well. So you touched on a lot there. A couple things that came to mind that I wanted to point out on is, you mentioned when you're sending letters to owners, you want to meet them in person. One thing you just noted there as well is when you're talking to your tenants, you want to meet them face to face and have that conversation as to where their rent is today, where's market. There's a lot of face to face human interaction, and I'm sure that goes such a long way, especially in today's environment when, we're on the computer right now, you're in Kansas City, we're in New York, right? Like there's a lot of this behind the screen type of conversations and or over the phone where another property manager might just call them over the phone and say, "Hey, your rent's $600. You're pretty low. Like we're gonna jack you up," right? So I think that goes a long way in really cultivating that relationship with your tenant base and that experience. You covered a ton today. I know, for the sake of time, I kind of want to ask you what's next for Aaron Ford, your companies, your property management companies, and the aspirations of the next 3 to 5 years.
Yeah, well, this is an operations cycle, like I said. So the first and foremost is to optimize this new management company and our operational system and team. So we'll continue to do that. And I see that stretching out here over the next year or two. Frankly, since you asked me, I see a little bit of tougher times on the horizon. I know we all hope that the rate's going down here. We've had some good news here recently, and although I'm an advocate for that, I'm just a little careful right now. So what's next? We're still actively doing deals. There's a lot of things out there that pencil for me. So there's one currently that's 28 units. Just came to an agreement with an owner they've been working on for over 2 years. We're buddies now. We talk and called over the weekend here and said, I'm ready to do it. We're done. I'm 70 years old. Let's do the deal. So that's exciting, and have the confidence to be able to add that on into the team or the system with ease. So I think a lot of the same, guys. That's what's up next here, and just the difficult part of this thing, right? When I got into real estate, I thought you made money when you buy real estate. And the game was buy as much real estate as possible because you make money when you buy real estate. We've all heard the saying. But the truth is you make money when you operate real estate. And that's the hard part. That's go sign on the debt and you did the deal, the negotiation's done, you feel great. And then you're like, gosh, all the hard work has to start now. So that's kind of where we're at right now. I feel like, both my business partners and I, and just what we have is like, it's just time to do the hard work, right? And we'll make it through this prices are likely going to go through the roof after this, right? So typically these cycles are a couple of years, right? And what I mean by these monetary tightening cycles and expansion cycles, right? So if you remember after COVID, there was all this helicopter money and STEMI money, right? Well, fast forward a couple of years after that started to come out, what happened? Inflation was through the roof and rates had to go up, right? Fast forward a couple of years after when they started tightening, and here we are. Rates are getting ready to come down, and we're getting ready to go through another little deal. I think in 2-year time frames on this, and for the next couple of years, I think it's operations.
Aaron, congratulations on getting yet another deal in your pocket, and kind of excited to see the progress that you make on that one as well. Is there any final kind of tips? I know you've given a ton of tips today, probably some of your deepest, darkest real estate secrets there, and I'm sure a lot of people are going to take some of those and actually apply them. But is there anything else any other tips that you want to share before we wrap this thing up?
I don't know if it's a tip, but here's the deal. When your viewers take some of these things and put them into action and are successful, because they will be, right? Hit me up or hit Brian and Chris up, and let's do a deal together, right? Aaron at securemultifamily.com.
That was going to be my next question. Where can all the viewers find you, right? Because you've offered a ton. I'm sure you're going to get people reaching out to you. You obviously know what you're doing. So please let us know where we can find you. You just provided your email, but socials, websites, stuff like that.
Yeah. I'm online. You can find me pretty easy. Aaron Ford, Kansas City. You'll pull up anything on Google about me. So, but yeah, you shoot me an email anytime. We'll go. Busy, but we'll go through whatever deals you can, and just think of us when you find a deal.
Well, thank you, Aaron. We'll make sure to put all of your contact information in the description. But really do appreciate you taking the time today, Aaron. Thank you for all your insight.
Yeah, great questions, guys. It was fun.
Thanks again.
Thank you for tuning in to the Peak Profits Podcast. We hope today's episode was not only inspiring, but packed with actionable insights for your passive real estate investments. Subscribe so you never miss an episode. And if you enjoyed the show, please leave us a review. Your feedback fuels our passion to bring you even more valuable content. Stay connected with us on social media and visit 7peakcapital.com for exclusive resources and updates. Until next time, keep striving towards your financial goals, and let's reach new peaks together.